Tuesday, the 15th of January. Welcome to the program. This is your Business Morning. I am Bosun Omofai, and it's good to have everyone here on the show. Our viewers here in Nigeria and around the world, you're welcome. But of course, the big story here in Lagos today will be the array of economists and special people in financial analysis and whatever, who will be coming together, more than a dozen of them, to discuss some very important issues. It's the Nigeria Economic Outlook Summit on reforms, investments, and jobs. Those three important pillars of the broad economy will be the main focus of the Nigeria Economic Outlook Conference. And of course, on the panel and those giving special discussions will be Charles Robertson, who is the chief economist at Renaissance Capital, one of the world's investment banks. Also on the discussion on the list is Kingsley Moghalu, who is a former deputy governor at the Central Bank of Nigeria. From PwC Nigeria is a partner and the chief economist Andrew Nevin. The CEO of ProShare, Olufemi Awuyemi, is also among the discussants, including Mustafa Chikeobi, who was a former managing director of the Asset Management Corporation of Nigeria, as well as Muda Yusuf, the Director General at the Lagos Chamber of Commerce and Industry. Quite an array of these big names discussing those issues, reforms, investments, and jobs as we get the new year started. This is the first major get-together of the big names within the economy in the new year to discuss the direction in a year that is being clouded by the political jostlings and the general elections just a few weeks from now. Meantime, the moribund Ajaokuta steel project is still on the radar of the BPE for privatization. So how do we intend to go with this? The Minister of State for Mines and Steel, Abubakar Buhari, says 11 private firms or investors are angling or jostling, as it were, or bidding to take over the plant located in Kogi State. But he, the Minister of State, Mines and Steel, says that, quote, we will prefer a Nigerian government or Nigerian consortium, that the government will prefer a Nigerian consortium of investors to take over the Ajaokuta steel complex because of the strategic nature of steel in the economy. Of course, the government, of course, the PP, Ministry of Mines and Steel on one side, and the National Assembly on the other side are still at loggerheads. The federal government wants the privatization of Ajaokuta Steel and want to be run by the private sector. But the National Assembly keep insisting that they prefer that the government fund the Ajaokuta Steel or give it some bailout, billions of naira, complete the project and operate it. Says they're not interested in the privatization of the Ajaokuta Steel company has been pursued by the BPE and the Ministry of Mines and Steel Development. But the biggest story in the world today, as you may already know, is the decision day for what you call the Brexit. It's a meaningful vote today in the UK Parliament. That will be about 7 p.m. Today when the parliamentarians will vote on what to do with the exit of Britain from the European Union. And that's making Theresa May's, the Martin Downing Street government hanging in the balance. Ahead of that, the market is on knife edge, looking at what will happen today. Michael Schumacher, who is the director of risk strategy at U.S. Bank Wells Fargo, says if the government, that's the Theresa May's government, gets crushed later this evening, then you have a big risk of move. But he says if it's a close defeat, then you might see equities do okay. It's a Pandora box, according to Schumacher. He says we'll talk to clients in the UK. They don't know what to expect. Everyone is sitting on their fingers, on their palms, as it were, right now around the global markets, waiting for this very important decision later this evening. So all of this will be part of the global outlook that everyone and around the world are watching very closely. So what the global issues are really matters to what happened in the Nigerian market, and those discussions, those considerations were part of the discussions yesterday when the head of the Nigerian Stock Exchange, Oscar Onyema, briefed the press about the state of the market in 2018 and what the outlook is for the new year. Let's take a listen to what some of the things that Oscar Onyema talked about.
The Nigerian capital market started the year on a high note, with the Nigerian Stock Exchange All-Share Index reaching a 10-year peak of 45,092 in January. This was largely driven by the positive performance of the NSE All-Share Index in 2017, which emerged the best performer in Africa and third best globally, according to this CNN. As we approached the second quarter, political risk, oil price volatility, and rising global yields resulted in bearish sentiments that saw the all-share index and equity market capitalization fall by 17.81% and 13.87%, closing at 31,430.5 and 11.73 trillion naira respectively. The performance of the NSE indices followed global trends in the capital markets during the year. The NSE Industrial Index was most impacted, declining 37.34%, followed by the NSE ASEM Index and the NSE Consumer Goods Index, which dropped by 26.99% and 23.28% respectively. The NSE Oil and Gas Index was the least impacted, declining 8.61%. While new company listings remained low during the year, equity turnover remained relatively stable, marginally declining by 5.45% to 1.2 trillion naira. Turnover velocity inched up 0.91 percentage point to 10.25%, and volumes traded in the period increased by 0.96% to 101.43 billion, with financial services sector being responsible for the highest traded volume and value. Moving into 2019, the International Monetary Fund forecasts global economic growth at 3.7%, emerging markets and developing economies to grow at 4.7%, and sub-Saharan Africa projected at 3.8%. Nigeria is expected to grow at 2.3% in 2019, making it the highest real GDP growth estimate over the last 3 years. Brexit talks, US-China trade tensions, and possible slowdowns in the global economy are some of the external factors that may impact NSE market performance in 2019. We expect that stable economic activity across emerging markets, following a stalled rally in the US dollar, and expectations of stronger fundamentals within Nigeria's frontier market securities will be favorable to the Nigerian market. Domestically, we believe market sentiments in the first half of the year will be driven by uncertainty in oil prices, as well as the 2019 general elections. Accordingly, we anticipate volatility in equity markets in the first half of 2019, with enhanced stability post-elections. We believe swift approval and implementation of the 2019 budget will have a positive impact on companies' earnings as well as consumer spending. Therefore, we expect a return of primary market activity with an uptick in secondary market activity during the second half of 2019. The NSE's focus for 2018 has been on organization restructuring, customer centricity, market development, and innovation. We expect to advance our efforts in these areas in the coming year and capitalize on the milestones reached thus far. In 2019, we will continue executing on our 2018 to 2021 strategy working even more closely with our stakeholders, particularly our market intermediaries, to onboard new financial instruments and maximize organizational value. To enhance our listing prospects, we have strengthened our government engagement efforts on privatization and listing of state-owned enterprises, and we expect to take advantage of opportunities within this space during the year. We also intend to maintain our collaborative efforts with private and public sector stakeholders to advocate for market-friendly policies and cater to infrastructure financing needs